Hello students, welcome back for another lesson in Microsoft Excel. This week it is lesson 2 and it is week 3. Today we are going to cover a few different topics, one being payments again, like we did last week at the end of the last lesson. And then we will look at leasing and what is the actual difference between a lease and a payment if you were to be purchasing a home, or not a home, sorry, a vehicle, because you wouldn't be leasing a home technically. And then lastly, we'll just do some sorting and custom sorts, so maybe a little bit of filtering and things of that nature. So nothing overly complicated this week. We'll keep it nice and simple. And of course, if you have any questions, you could bring them to my attention during our session, okay, this week. As you can see on the screen, we have a workbook open, which you should be downloading from our Blackboard or in the description below in the actual YouTube video. Okay, so you can grab the link, or sorry, the file either place. We have 3 sheets at the bottom. One says mortgage, one says lease, and one is a billing summary sheet. And we'll go through each one one at a time. So to refresh our memories on payments like we did last week, what we're going to look at is the potential for a monthly payment right off the bat. This week we're going to change it up a little bit though. We're going to also add biweekly and weekly into the mix so that we can get an idea of what the payments would look like based on a different frequency. What we have is we have a house price, okay, which is normal. We'll have some form of a price for a property. And then what is also normal is a down payment that would be made on the actual property as well. It's very, very rare, especially these days, that you'd be able to purchase a home with a 0% down payment. So we need to have something to show for ourselves. So we've got a $300,000 house price, and we have a $50,000 down payment. And the reason why I'm stressing this is because a lot of people confuse things and think they pay interest on the purchase price, but they don't. You're going to be paying interest on the purchase price minus how much you put down day one, which in this case, 50,000. And we'll see how that plays out. We have a rate of 1.95%. Also keep in mind, as a refresher, 1.95% per year. So it's typically guaranteed. If it's a fixed rate, it'll guaranteed to stay 1.95% for the term of the loan. I've also used the word term here, which is a little bit confusing because this is actually the amortization period. This is the overall term of how long you would be paying this home back over what period of time. And in reality, most mortgage products that you can buy from the banks or a mortgage broker, usually they're like a 4-year term or a 5-year term. And then at the end of that 4 or 5-year term, you would need to renegotiate a new term. But the overall length of the purchase is what we deal with when we are calculating a mortgage payment. When we looked at the car last week, it was a very straightforward term. It was 5 years or 6 years or whatever it may have been. So that's normal for a vehicle, but for a house, that would be really short and it would cost us a fortune. And you'd have to have a really awesome job. And, it's not to say that's not possible, but it's very difficult. So let's take a look here. The difference between monthly payment, bi-weekly payment, and weekly payment is strictly the frequency. Okay? And so what I like to do is I like to remind the students, make sure that you know the difference between the frequencies. Monthly, how many months are there a year? Well, there are 12. Bi-weekly, how many bi-weekly periods are there in a year? Some people think it's 24 because they think 12 months, twice a month, 24. But that's not accurate. It's actually 26. It's extremely important not to make that mistake. It will impact your final number greatly and could cause a lot of problems. So make sure you know monthly is 12 months a year, biweekly is 26 times a year, and obviously weeks is 52 weeks a year. So these frequencies will play into the calculation here of our mortgage. So let's take a look. I'm going to click here in B8, and what I'm going to do is I'm going to go to the FX button like we did last week, and I'm going to find the PMT function, which is here. I'm going to click it. I'm going to make sure my dialog box opens up. So now I have my dialog box, and I need to plug in everything properly in its place. Otherwise, my number will be wrong. So let's go one by one. First of all, it is a rate of 1.9%, or sorry, 1.95%. And so I need to make sure that this rate is referenced here, so B5. But as you know, it needs to be divided by 12 because it is 12 months a year. It's a monthly payment. The number of periods is the term, the overall amortization period of 25 years. And in this case, we need to multiply it by the frequency. So I'm going to multiply it by 12. So there should be 300 payments over a 25-year period. And lastly, what we need to do is we need to get the present value. Well, this is a little bit different than it was when you did the calculation for the car last time. In this case, what we've got here is that we've got a down payment. So what we need to do is we need to make sure that the present value will be negative, open brackets, the amount of the car minus the down payment. And so what you'll see here on the right-hand side is a negative 250,000, which is perfect because that's what we're looking for. We're looking for that negative amount that we are borrowing from the bank. We do not own the home. A future value, we leave it blank because, again, this is not a lease. Next sheet that we look at will be a lease, and we will need this future value. It's very important. And then last but not least, as mentioned last week, unless you're told that this payment's going to be at the beginning of the period, you leave this blank. And so that's where we're at. It's really simple, just these three things, and then click OK. Now what you'll notice is your monthly payment for this property is $1,053.56 per month. Now we can run the exact same formula and then change the frequency to see what our biweekly will look like and what our weekly will look like. And so I'll do that now. Back to the PMT. Make sure it's still selected. Click OK. And now, so the rate is going to be, I have to be careful because my mouse clicked it, that the rate is B5 divided by, not 12 this time, but 26. See, I almost made that mistake, and I do this every day. So B5 divided by 26. Next, it's going to be my number of periods. Well, it's going to be my 25 years, which is B6, multiplied by 26. Notice the frequency follows. It's common. And then this one's simple as well. It's just business as usual. It's going to be negative B3 minus B4 and close the brackets. When I click enter, you'll notice that my payment bi-weekly for this property is $486 every 2 weeks. You'll notice it's also less than half of this payment above. And that's how you can really double check yourself quickly to make sure you didn't make a mistake. Make sure that your bi-weekly payment is always a lot, or not a lot, but a bit less than what half would have been on your monthly. Okay. And then for weekly here, we're going to go back, PMT, and make sure it's good. Excellent. So same process. Rate, this time divided by 52, right? Because there's 52 payments every year. And we click on the term. We need to multiply it by 52. There are 1,300 payments if you do it weekly. And last but not least, your negative of 300,000 minus the 50,000 down payment. And you'll notice now your weekly payments are $243.01. Okay, so I hope that that makes some sense. If I were you, I'd watch it a few more times just to really understand it. And if you do have more questions about it, of course, we can discuss it in class. Looking at our second sheet tab at the bottom, we're going to be doing leasing. And the really good thing about leasing is it's actually identical to calculating payments, except for the fact that we've now got one more item called the buyback. Okay, and to really explain that to you as easily as possible, just think of it this way. At the end of your term for a lease, you have to do one of two things. You either have to pay the company that leased it to you $20,000 at the end so that you can keep the equipment. Or the second option is if you choose that you do not want the equipment anymore, then you do not have to pay them the $20,000, but they will take the equipment back from you. And then you'd have to make a decision on what you're going to do next. So that is basically, in a nutshell, what the difference is between a lease and just a regular payment. And we're going to see how it impacts our numbers when we do the calculations. A payment calculation and a lease calculation uses the exact same formula. So let's take a look now. In order to set this up, we're going to do what we did in the other sheet tab. We're just going to put reminders in what our frequencies are. So monthly, 12, biweekly, 26, and weekly, 52. What I'm going to do now is I'm going to make sure that I do my first formula for the monthly lease amount, and I'm going to place it in B9. Once I have it selected, I'm going to click FX. Payment is still my option. I'm going to click OK. Now, you know from before, we need to do our rate. So our rate is 3.9%, and we're going to divide it by the frequency, which is 12. Then we're going to look at our period, our term. Our term in this case is 5 years. So we're going to click on B7, and we're going to multiply by 12. The PV is just like we did in the previous example. Negative, open bracket, your cost minus your down payment. And you'll notice on the right-hand side, it is a negative 90,000. Some students asked last week whether or not it mattered if it was a negative 90,000 or a positive 90,000. And I said when it was strictly a payment, it really wasn't a huge deal because the number was going to end up being the same. But there were applications that supported both. But when you're dealing with a lease, this cannot be a positive number. It must be negative. And so I must stress to you that when doing a lease, ensure that there's a negative PV. And here's why. When you put in your FV now, which is your first time doing the FV, which stands for future value, this number must be positive because it's not money you're paying interest on. So let's take a look. The FV is actually your buyback amount in this case. This would be your future value. I click on it and it's going to go in as a positive. So if you really wanted to look at this loan, you would see that you are actually borrowing 90,000, but you're only going to pay interest on 70,000 because there's a positive 20 at the end. So your payments are really based on 90 minus 20 for 70,000. So let's take a look. When I click OK, we'll get our monthly lease amount of $1,351. If I took this buyback out and it didn't exist, and I put a 0 there, you'll notice your payment increases substantially because there's no future value to the equipment. You're actually leasing the full 90,000. Okay, so just make sure if you need, you can ask me questions about it. But I invite you to do a little extra research on your own to see what residual values are and future values are and what they're all about. Okay, but that's how you calculate it. Let's do the next one. All right, so in this case, same thing. Rate divided by frequency, 26. Number of periods multiplied by the frequency, 130 over there. And then again, negative, open brackets, your cost minus your down payment, close. But in this case, we also continue to have a future value, and it is 20,000. I'm going to press OK. And then last but not least, we're going to do the payment for the weekly payment here, your weekly lease payment. So rate divided by 52, number of periods multiplied by 52, negative, open brackets, 100,000 minus the 10,000. And last but not least, our future value. Perfect. So what we have here are three lease amounts, $1,351, $623, and $311. So just to reiterate and just to summarize it, a lease is something that you either pay the buyback at the end to keep the equipment, or you do not pay the buyback at the end and you give the equipment back and you start from the beginning. If you have any questions, again, make sure you bring them up in our class this week. On our last sheet here at the bottom where it says billing summary, we're going to do some analysis and some sorting and things of that nature to the data that we have here. Now, we want to take a look to the right because at this point, the way I'm zoomed in, I don't have any of my instructions. They're over to the right of the data. So I'm going to slide across over here. And what you'll notice is, right off the bat, we're going to run a VLOOKUP for the collections so that we can continue to practice that. As I know we did it last week, but this is going to be a big part of your tests, so we want to make sure that you're comfortable doing it. So what we're looking at here is a collections. We need to put this sort of letter in this column based on the total. So we're going to compare the total to this number, this set of numbers here, and then apply the appropriate letter, as you notice on the right side. To do that, we need to go to FX, go to the VLOOKUP, and then click OK. Once I do that now, it's going to say, what's the lookup value? Well, the lookup value is the total here. So the lookup value is J5. Then it says, what's the table array? Well, the table array is O2 to P7. Okay, so O2 to P7. And you have to remember, make sure the entire range of your table is absolute. Notice the dollar signs, $O, $2, $P, and $7. It is absolutely crucial that these are absolute because when we drag down the formula, we need to make sure this table stays in one spot, doesn't move. And then last but not least, what we need to do is we need to look at our columns. We have 1 and 2. It is column 2 that we want to place under collections. And you're going to see there's a result of a D here. So if I take a look, 337, it falls between 3 and 400, which means it is going to be a D. Perfect. Now I click OK. Once I've done that, I need to copy this down all the way to the bottom. And the fastest way to do that is to go to the bottom right corner. See this plus sign here? This one, it's really thin and dark versus the nice one like this. This one here looks like it's a worker, and you're going to double click it. Once you double click it, the collections letters should flow all the way down to the bottom, and they should all be accurate. Okay, so that is very, very important. Remember the absolute references so that you can actually do the dragging all the way down. So that's the first step of the sheet. Let's take a look at what else we need to do. So I'm going to scroll over to my left again. Now I've got a situation where I've got a bunch of hashtags happening and I'm not sure, what's going on. I'm a little bit worried. Well, I'm not, but you might be. So here's what you do. You actually double click in between C and D to make sure the column is wide enough to display all of the information that we have. Okay, and so now I can see my dates. But beyond that, what I want to do is I want to be able to always see the first 4 rows of my worksheet. The problem is when I scroll down, I lose the top. And that's because I need to freeze rows 1, 2, 3, and 4. To freeze the top 4 rows, it's quite simple. All I need to do now is select A5. The reason why A5 is because everything above the selected cell will freeze once I run the command. If I have it in A4, only row 1, 2, 3 will freeze. So I'm going to go back to A5. I'm going to go to View at the top. I'm going to go to Freeze Panes, and I'm going to choose Freeze Panes again. Once I do it, you won't notice a whole lot. However, when I scroll down, check it out. My titles are always visible. This is absolutely critical when dealing with large worksheets. Okay, so this worksheet has about 104 rows of data, and we need to be able to adjust it so that we can work with it efficiently. And so that's what we've done here. I've actually frozen rows 1, 2, 3, 4. Keep in mind the freeze is only frozen for your view. It does not freeze it when you print. So if you printed it out and it was 4 pages, those 4 lines would not repeat themselves. We will look at that at a later date, but that's not part of the lesson today. Next, what we're going to do is we are going to sort the data. So let me show you what we're dealing with. In the collections letter, when I scroll down, you're going to notice that I've got letter D, and then C, and then E, and then D again, and B, and then D again. So what would make more sense in this situation is to actually sort the data, the actual sheet data, based on collections. So we can put all the collections together, starting from A and going down, or whichever direction you want to go. The most important step in doing this is to select the data properly. To select the data properly to sort, what you need to do is you need to select A4, which is the first column, right? And the first row of our headings. So A4. And then you'd want to make sure that you went all the way down and selected K104. So the range that you're selecting should be A4 to K104. Once it's all selected, now we can actually run the sort. To run the sort, you need to go to the Data tab. To the Data tab, and then you will see this sort option here. These sorts are basically for the first column, but when you're doing more advanced sorting, you need to choose this option here. When I click on it, it's going to say that it's sorted by date from the newest to oldest. But I discussed with you that I wanted to do collections letters. So what I'm going to do is I'm going to change this from date to collections. It is at this point I have to make a decision. Am I going to go from Z to A or A to Z? And in the real world, you get to choose that on your own. You get to make that choice. It doesn't matter. But for my example, I would say let's just go from A to Z. And then I'm going to click OK. And so what happens now is There are no A's in our collections column, but we do have B, C, D, and then E, and then F. Let's take a look at this a little bit more in detail. So here's what we got. For letter B, they're all Marty O'Donovan. No problem. Then we get to letter C, and we've got Tony Sullivan and Rosa Martinez, Kyle Williams, and then Rosa Martinez, and then Kyle Williams again. So here's a little bit of an issue, right? Perhaps you want to have all your letter C's together, but you also want to have all of your accountants together as well. You don't want a break. You don't want to go from Rosa to Kyle to Rosa to Kyle. That doesn't look very clean and it could become complicated. So what there is an option to first sort by the collections column, and after that, if any of these are the same, they can then go and look at the accountant and sort it by that as well. So let's take a look. Everything is still selected, so A4 to K104 should be still selected. And if it is, then you can go to your sort option again. But you'll notice it says it's sorting by collections. We need to also sort by accountant. So this is primary. This is your first one. This is the most important sort. Then you can add a level to do a secondary sort. So it first looks at collections, then it's going to look at the, in this case, accountant. And you can leave it A to Z as well. Let's see what happens. Your B's are the same, your C's are the same. You're all the way down, look at that. So you've got Kyle Williams is all together, Rosa's all together, and so is Tony. And so you've got it sorted by collections and the accountant. And so that's the benefit of having multiple levels of sorting, so that you can actually look at a secondary object if the first one is matching something already. So these C's all match each other, but we can also then look at a second column to even sort it even further. So that's important. The next thing I want to show you is the filter. Now the filter is a little bit different than the sort. A filter, you can actually just select your headings. You don't have to select all the data. And the benefit of filtering is it'll remove items from your sheets that you need, or that you don't need, and you can remove them temporarily, not permanently. Some people are like, why don't you just delete it? Well, no, because what if you need to get that data back or use it at a later date? Filtering allows us to take spreadsheets with large amounts of data and then shrink them down to something manageable. So it's a really, really powerful tool. And here's how it works. So you go from A4 to K4 and select your titles. At that point, you can go to your data tab at the top and click on filter. What happens now is you're going to get these little down pointing arrows. These down pointing arrows basically drill into the data itself. So for example, if you only wanted to see invoices by one specific accountant, you can go to the accountant drill down menu and you can choose which account you want to see. In this case, I'm going to say, let's look at Rosa Martinez. I'm going to take off the checkbox because I don't want them all, and I just want Rosa. And when I click on just Rosa and then click OK, voila. Now I only have Rosa in my list. This allows me to look at the data and do any analysis that is required. Once I'm done with just Rosa, I can go back here and I can clear the filter from the accountant. Okay, so that's one option. The other option is to clear here up at the top. Perfect. Once cleared, all of my data is back. Let's take a look at the total column. The total column is dealing with numbers, and there's tons of them. If you are looking at numbers and you want to filter based on a criteria, you can do a number filter. So let's take a look. I click on the total, drill down menu, and instead of just deselecting and selecting the ones I want, which is a lot of work, I can use something called the number filter. And in this case, let's say I only want to see invoices greater than, and I can put in 300. Okay, so these are invoices only greater than 300. Right now I see these ones that are 192, but they shouldn't be there once I run the filter. Let's check it out. Perfect. So now you know the filter's working. The only records I see start at 337 and go to 500. There's nothing less than that. So that's another way to use filters for your data when you have large amounts of it. Once you're done with your filters, you can actually turn them all off. I always actually recommend in person, specifically when we're in class, I always recommend that you turn your filters off if you've worked with a spreadsheet. Because the issue is, if you save the spreadsheet with filters on and you email that to someone or somebody else is using that file, they may not know about filters and it may create some stress. So I always recommend, unless you know you need to leave the filters, you should go and turn them off once you've done your analysis. So I'm just going to click the filter button. The filter drill downs are all gone, but all your data has come back. Nothing's deleted, nothing's permanently gone. It is all there for you. One of the last things that we're going to do is we're going to actually do a conditional format. So what is conditional formatting? Conditional formatting allows us to look at a range of numbers and quickly do a visual identification. So for example, let's take a look at the billable hours in column H. I'm going to select the first one, which was $3.5 hours, or 3 hours, 3.5 hours. Now I'm going to go all the way down and I'm going to select all the way down to row 104. And so what I want to do in this case is I want anything less than 4 billable hours, I want it to light up red. So that way I can see quickly that something is wrong. So to do that, I need to go to my Home tab, and I then go to the Conditional Formatting option over here in the Styles category. When I click Conditional Formatting, then I can choose to highlight any cells that are less than, and I had said 4 hours. So I'm going to do 4. So any invoice less than 4 hours, I want it to be red, light red, with a dark red text, and click OK. And what you'll see now is that because these are less than 4 hours, they are lit up. And now that gives me the visual cue that I need to go in and see what's going on. Here's the really amazing thing, and I'm going to show you when I scroll up to the top. So row 5, if I go to the billable hours here, which is H5, and I change that now and say, oh, no, it was 4 hours, and I change it, the formatting, the conditional formatting disappears, which is quite incredible. It's all linked together. If I change it again, if I go back down to 3.5, it goes red one more time. So conditional formatting is a great tool to allow you to draw attention to numbers that may be or may have an issue based on the criteria that you set. Okay, so that is your conditional formatting. The last thing we're going to do, the absolute last thing we're going to do today, is to remove duplicates. I'm not quite sure if you noticed, but if you look at the data closely, you're going to notice that there are repeats. This is a repeat, this is a repeat, this is a repeat, and so on and so forth. These are all repeats, which means that somehow this data came to us and it was corrupt and it had duplicates in it, which would inflate our numbers. So we need to go in and we need to fix that. It's called the Remove Duplicates tool. So what we're doing now is we need to, just like we did for our sorting, we need to select from A4 to K104. Okay, so the entire data set needs to be selected. Once it's selected, we're going to go to the Data tab here at the top, and you're going to look at the option to allow us to remove duplicates. When you look carefully, depending on your screen resolution, it may actually say remove duplicates, or it may just give you a little icon like this. When there are little icons like this, it always creates difficulty in trying to find it. Okay? So just be careful, look for the icon, and you should be okay. So it's under the data tools. I'm going to click on remove duplicates, and I'm going to make sure that it's going to confirm that not just one column is a duplicate, but every single one of these are a duplicate, which means if this invoice, file number this, was 3.5 hours, but everything else was the same except for this being 3.75 hours, it would not remove them because these two things are different. When we have all checkboxes selected, that means every single thing has to be the same in the range in order for it to get removed. So let's take a look. I made sure it's all selected. Click OK. And what it said is there were 81 duplicate values. Let me click OK. And that's true. There was. This spreadsheet was corrupt and had way too many duplicate values within it. When you've actually removed them, the data makes sense. Okay? The data is clean, and the data is only good as its accuracy. So it's very, very important to make sure that when working with large worksheets that you've done the data accuracy test on it and you're doing the remove duplicates where necessary. I hope you found this lesson useful, and I look forward to seeing you guys later this week. And again, if you have any questions, feel free to let me know via the team meet that we're going to have or through email. Either way works. Have a great day and take care of yourselves.